Hold on here. I just have to start recording. Ira,
Yeah,
welcome back from the holidays.
thanks. Uh, I have a great audio. Thanks, Dave. I'm actually getting good at this. All right, what's going on? Let me go to the questions, I think, Judd. Is that where I'm supposed
Okay.
to go? Why don't you read them to me? I have read them, but read them to me. And
All right, hold on a second. Let me just scroll back to them. Okay. My bias or concern is this collapse in demand and activity ends a long leverage cycle in one of the worst ways possible. Thus, a debt crisis across many sectors is being launched and will evolve. Do you agree or disagree? And what signs beyond the Fed's interventions do you see that this is or is not unfolding? That's from Peter.
Peter, okay, great. Great question. This is the question on everybody's mind. This has been the theme of Lacey Hunt. It took me a little while to get on the deflation front. I will tell you this. I just did an hour taping, so I'm a little bit late, and then I did a little study with Daniel Lecale, from very well known from Europe. We had a very good discussion, and he's definitely deep in the deflation camp. I honestly, at this point, when I think about it, I don't care, because my premise has been, for as long as I've been blogging 10 years and people have known me and things we've discussed about going back to the 80s and 90s, my issue with deflation is that's what scared the central banks into action that they've proven is very willy-nilly, and it's just to stem what they believe is the potential rise of deflation. So, Peter, that's why the question is so important and bears so much fruit, because are we going to go into deflation? I don't know. I truly don't know. The central banks are going to do everything in their power to prevent it. So that's what I'm more interested in, because what's the fallout from the attempts to prevent it? Right now, they're failing. And you say, well, they're not failing. The stock market, that is just one indicator. Again, the dollar is too strong, and the strong dollar is providing more emphasis for a deflationary cycle, because everybody's out there trying to raise dollars, but it's a difficult environment to raise dollars, especially for the emerging markets. And as my last night's blog talked about with China, which was from the South China Morning Post piece on last Friday, about the stress being caused by a strong dollar. So that creates more deflation in the system, because as we see, countries have to sell more of their goods, but you can't sell more of their goods because demand is declining. So that sends prices ever lower. And we go back to our favorites, as we've discussed in this room many times, the CRB or the Bloomberg index. It's making new lows. And these are, as I think, Judd, did you have in your notes today, 40 years lows, 45-year lows?
Yeah.
Okay.
It's crazy.
Well, and that's it. And the dollar goes ever higher. And then Commander-in-Chief talks about a stronger dollar out of nowhere. On Saturday, there was the article in Bloomberg, which doesn't help the situation. Again, people, you have to separate the way you see the dollar. Is the dollar a trade issue? Sometimes. Well, right now it's a total financial issue, because that's its role as a reserve currency of the world. And the Fed is doing its best to try to curb the strength of the dollar. And then Donald Trump comes out of nowhere and does a 180, or volte-face is a better word, and starts talking about a strong dollar. And that's also whipping up the winds of deflation. Want to see it? Look at the oil market. Now, the oil market on its face really didn't have anything to do with the commodity itself. More, it was a bid, and that's what it was, the inverse of the price of the oil. is a bid for storage capacity. And storage capacity, there is none. So nobody wanted to take delivery because there was nowhere to put it. And this has really been indicative. I was actually, I was on with Matt's group yesterday morning. I did a little bit of time with them because he had asked me. But I talked about that. And you can really see this. And I think we talked about it in this room because somebody brought it up about the lease rates for oil tankers weeks and weeks ago. So somebody was very astute in locking up all that shipping, not because their oil was going anyplace. It just sits. But some of those super tankers hold mammoth amounts of oil. And if you got to store it, you got to store it. And they were paying record lease prices. And it hit me back then. How can that be? There's no demand for oil. We know what the price is doing, but they were just locking up storage capacity, which is very, so you got to look at the shipping stocks. They will probably give you the oil tanker stocks.
Guys were long STNG Scorpio and told them to get out yesterday morning.
Yeah. So those are good indications. Is that, okay, let's take a look at it. Yeah. And you see, so if that high holds, it's pretty good that, you could probably trade the oil. You'll do the correlation with it, but that does get interesting. How about NAT? I haven't looked at North American tankers. What's going on there? Are they still in business? I don't know whether.
Yeah, they're still in business. Got the same pattern.
Okay. Yeah, because they were close to bankruptcy at one, because the problem with the shippers is that they're always taking on, they're like the airlines. They have massive amounts of debt because these ships are expensive. And if the economy slows down, that generally is not a good time. But we're certainly looking at other events, which is another arrow in the quiver of the deflationists. But and this is why we will search out and sort out all types of trades, because I care not whether it's deflation. You want to define it. It's like defining, are we in a recession? I've tried to beat back that stupid logic, because that's always a backward looking indicator, because you only know you've been in a recession, quote unquote, for the people who need to have that word after 2 quarters of negative growth. But that's looking in the rearview mirror, because the one who makes that determination is the National Bureau of Economic Research. And we already know from market action that's well in the past. So I care not about it. I don't care what you want to call this, but Daniel Lackel was really good, and I'll post it on the blog as soon as I get it from FRA. But because then he's looking for stagflation, which I'm sure where Peter's going here, because of all this liquidity dump upon the global system. When will it work out? I don't know. Will we go into deflation?
You're kind of worried, like a credit, a debt crisis, like an energy site. We already know there's a debt crisis there.
Exactly.
It's probably accelerating after what happened this weekend, what we saw to the crude price.
Oh, it's over. There's a guy who I sat with on Monday who's a wildcatter from Kansas. Well, he's not retired. He's really involved. He's the guy we talked about who gave me Range Resources. Remember, Judd? We talked about RRC.
Yeah.
And that's really an amazing stock. And I told him that the other day. In fact, last Thursday, I was emailing back and forth with him because we didn't. Oh, it's huge. And it's really emblematic of exactly what he told me it would do, which is, now that the frackers are calling it quits or pulling back, there's a lot less natural gas being produced. And that's what you're seeing. So that was the absolute penultimate play. And it's probably not over, because as all this fracking declines, you're going to lose a lot of natural gas. The thing was, they were burning it off because it was so cheap. Where we get down to 160, 155 on nat gas for 1,000 BTUs.
Yeah, they just crushed it.
Yeah, and it sat and sat. It was like one of those classic commodities that there was so much, it just kind of, and now it's working its way off. And I mean, I've made money in this stock, even in the face of all this, which is kind of unbelievable. I was really patient with it. But what else did he give me? Oh, Cabot. You got Cabot?
Yeah, Cabot actually looked pretty good. We looked at that earlier today.
Yeah, yeah. Mike is high on Cabot. See, these are companies that he not inside knows, but he knows as a wildcat or an operator, he knows who runs a tight ship and who got their house in order. So, I mean, it's very interesting to watch this, but that's the effects of prices, heading down. There's very little demand and a hell of a lot of supply, and you can't stop the supply, especially for a lot of these companies. You got to keep product going through those pipelines. There are scientific reasons why they can't stop. And as Mike told me, in Kansas, for the guys who are running wells, they're already and have been selling oil for $6 a barrel because they just have to keep going and they have to sell it. And now they figure they'll make out, when prices do return to some level, and the economy gets better.
Well, that's where I came up Monday with $2 because it was changing hands in the cash at $2. I thought the May had come down there. I didn't.
And lo and behold.
Yeah. Away it went.
Markets actually do work. But here's where we sit and here's where we play. But this does really get interesting. But whether deflation takes hold, my bet has always been that they will do whatever. I hate that phrase, but of course, Draghi unleashed it, whatever it takes to halt the spread of deflation. Because again, that's what central banks fear. Because what Japan has told them or taught them for the last 25, 26, 27 years is that it's very hard to push back deflation. Now, I'm not as convinced as others, especially when the United States is the purveyor of the reserve currency of the world. Japan didn't have that. And Japan had so much excess capacity built up through the 80s that was one of the classic elements of their deflation. That was not a demand deflation. That was overinvestment. So you have different types of things that promote it. At the end of the day, it's all about the debt. And I think that's what Peter is beating on here, because we do.
Well, I'm kind of concerned about debt across the economy, as far as like we're pretty sanguine about property values and mortgage debt, but
yeah.
But now people last week, 5% of mortgages were shown to be in arrears now because people have permission not to pay. And if these people don't come back to work, they won't pay for a while. And even if what it's going to happen to these missed payments, they're not going to make them up. They're not going to get caught up on those. And what are the secondary effects of that? As it starts rolling through. What happens to the bid for mortgage bonds?
A lot of the services, Peter, aren't putting those missed payments on the back of the mortgage. They're making you pay up after 3 months. The whole sum.
Yeah, that'll get interesting though, because that'll be contested. By the way, we'll see what happens with that. That's why there's a lot of people talking about things that have just not been. That are dependent upon how long this goes. They're dependent on several things. I know I've read those too, Judd. But Peter, that's exactly right. And the debt overhang, because debt doesn't go away unless it's either restructured or you go into bankruptcy to wipe out the debt.
Right now, I was looking at mortgage rates, and a couple of my kids would love to refi in California, but jumbo rates are 6.5%. Nobody wants jumbo rates. The mortgage market's broken. Of course, jumbos are over $500,000 mortgages, which in California are normal.
Because they're not guaranteed, so the banks don't want them on their balance sheets.
And they're worried about the servicing of them, and the servicers don't want them. That's why everybody thinks this is easy to get done a refi. I'll tell you what. I think I talked about this. I finally got my refi done, I think the first week of March. And in the throes of all this, and I was refining at 3.25. And I said, hell with this. Well, I should just cancel this and try to push for 2.5. Well, I'm going to tell you what, I'm glad my wife prevailed because she said, no, let's just get this done. I don't want to go through the headache again because I don't think I can get 3.25 because they're pulling back because they're very nervous about what the servicers, even though they tried to clarify this the other day, what the servicers are on the hook there for, because a lot of times the servicers have to carry a delinquent payment
Yeah.
at a certain point.
So what are homes worth in California going to be this summer if this is what's going on?
I can't tell you what the value of anything is, except that gold keeps pushing higher. And I'm pretty adamant. Yesterday's action, I think, was off the oil. That was kind of interesting. Like when I woke up and I saw it was $45 lower, I said, "Wow, how that happened?" But as the day worked on, and now of course we're higher, so that's actually very interesting trading action. But I can't tell you what the value of anything is going to be. I really can't. Let's see how deep people get into trouble.
You know, Ira, I had a conversation this morning, and the Russians were mega short, you know, before you know, they started this whole thing with OPEC, and even they missed a part of the down because they didn't see that it was going to do what it did over the last week.
Oh, no, yeah, this was very, well, again, as I teach you in law school, and I'm not a lawyer, but Judge, your brother will tell you, read the footnotes. And there's a lot of people who go into these ETFs, and I know they're easy, and for professional traders who know how to do the innate, the natural arbitrage between the futures product, it provides great opportunities. But there's a lot of things wrong with these ETFs. And the fact that they stay as long as they do, look at, there were people who made fortunes on the floor front running the GSCI.
Right.
Right?
Oh, yeah.
How about the slippage on the underlying commodities? And believe me, I know somebody who was offered that, who worked at Goldman Sachs. And he said, I can't put my clients into there, you know, because he could easily see with the forward rolls how much they were going to give away. He said, no, this is not going to be very efficient. So they said, well, you're evidently not the right person for this position. And that basically ended his relationship there. He worked there. And he called me. He said, what do you think about this? I said, wow, I'd like to be on the other side of every one of those trades.
Yeah, I mean, they just created, I don't know how many new shares in the USO.
Yeah.
So they could buy shares.
But that's out there, everybody. Oh, oil's cheap. You buy oil.
Yeah, it's the wrong thing.
It ain't cheap if you need a place to stay. Somebody said, well, I'll take delivery. You know, I made a joke. I said, I opened up a bank account the other day and they gave me a free contract of crude oil. So
a toaster, right?
Yeah, instead of a toaster, right? And then I only found out it cost me more than the account was worth. So not bad.
That's me. Every time I ever did a spread, I locked in a loss.
Yeah. So I don't know, but my trading attitude is now, okay, again, the central banks have showed us they've performed exactly as I thought they would do. And they're willing to destroy fiat currency as a store of value. Okay, that's what's going on here in an effort to bail out debtors. And if we take one thing away from this conversation today, step back and think about what that means. Because they want to destroy those who have savings in an effort to bail out everybody carrying all the debt that Pete's worried about.
Can you make a little sense of what's going on with the European debt this morning?
Oh, well, where do we want to go there? Oh, shit.
I mean, I was looking at the Italian, Angela and I were looking at the price action in the Italians. And then I was going to ask you if you thought the correlation had shifted. So when the Italians went down, the gold had rallied. I mean, I don't know what's what.
Interesting, Judd. But what we're seeing right now in that Italian, because now it's up pretty good, and the French is bearing the brunt, maybe. But it's either the ECB in buying, again, because we don't know how much they buy. So I'm telling you, I'm back to trading the European debt. I haven't traded them in a while because I needed to see some things, because they're a much better trade to me than the US, even though the Fed tells you kind of what they're doing. There's a schedule to it. The Europeans are going to get very aggressive here. And as I wrote, and Pete, if you want to make your deflation case, as Daniel LaCalle and I talked about it this morning, and he was absolutely in agreement. If Germany pulls the plug, and it's a very real, I don't know that it's a possibility, but it's certainly a topic for discussion. Then you want to see a deflationary spiral develop. Watch, and Christine Lagarde knows this, by the way. And so does Macron, finally understands it. And more importantly, the person who really has now understood it is Salvini. That because let's say that if Italy pulled out of the EU because they couldn't take it anymore in the treatment that they're getting, the European banks are stuffed to the gills with this debt. That's it's like why Germany couldn't let Greece, they played hardball with Greece, but they couldn't let Greece go because the amount of Greek debt that was owned by German banks was enormous. And even though 10-year yields in Greece went to 10%, I'm sorry, 40%, they still were there. But had they gone back to the drachma and Greece leaving, they would have taken an enormous loss. Well, the Italian situation puts all of them on steroids. So you got the French and German banks loaded with Spanish debt and Italian debt and Portuguese debt. Why? Because they've all been chasing yield like everybody else. When bonds are yielding negative 50 basis points, you get creative and you start going to search. But look at Deutsche Bank stock. People say, "Oh, you're doom and gloom." I've gotten into this discussion quite a bit for the last 4 or 5 days. I go, I'm not doom and gloom. But can you tell me what the European banking index is at?
Yeah, I just had that up. And the European bank stocks don't look good.
If you don't think that represents how bad, because don't forget the European, as Daniel LaCalle said, 80% of financing in the Eurozone is done through the banks. Not like in the United States, where it's probably 15%. I'm using his numbers. But you just look at this. This is the reality of the situation. And now, if you were to pull, if Germany were to pull out, then Italian yields would scream higher, Spanish yields would scream higher, even French yields would scream higher. And what do you think these banks would look like then? You'd have to do a massive debt restructuring. But the European financial system would collapse until otherwise rescued in some capacity. And its impact, deflationary impact, because if you think that COVID is a problem, go ahead, destroy the European financial system and see what happens. That would be truly the situation that would throw the global system into a massive financial turn down. If you thought Lehman was something coupled with AIG, this would be bigger. So on top of everything else that's going on. So Lagarde knows the Germans are trapped here. They're not going anywhere. And they can yell and scream. They'll scream Bloody Murray about the Eurobond. But as you'll hear in our discussion on the podcast, it doesn't matter, because what Lagarde can do, and if I was her, I would do it today. They have that meeting now going on probably now about collateral issues, and she's trying to get ahead, because if Italy's debt gets downgraded to junk under previous regs, the ECB would not be able to buy Italian debt. Want me to say that again? Buy it. unless they change the law. So they're trying to get out in front of it today with a video conference. And, and not only that, you'd have all these pensions and banks who cannot hold sub-investment grade debt who would have to get rid of it. So you want to know what will go on in the Italian yields?
Oh, it's just spike.
Oh, no, it'd be crazy. And the losses on German banks, Austrian banks, Dutch banks, I don't know what these people are thinking about. And anybody who knows me, I have not been a proponent of Euro bonds. But now that balance sheet over the last 3 years has been built up, 4 years, 5 years, so drastically, there's no getting around this. You may as well just unify European debt. Germany will have to figure out how this gets done, how much money is going to have to be transferred, how you're going to do the fiscal harmonization. It's too big to walk away from. It's too big to walk away from without an absolute calamity. And who's going to call the question? If I was Lagarde, it's almost like the scene from Blazing Saddles with Cleavon Little walking in with the gun to his head.
Yeah.
That's what it is. And
yeah. Okay. Just rallied 300 points and they're only back to the 200-week moving average.
What did the BTBs?
Yeah, they rallied 300 points from this morning's low right back to the 200-week moving average. So, all they've been doing is spreading buns against the Italians.
Yeah, lovely times. That's where we're at here. But this is a very dangerous time to be playing this game because you haven't seen enough in the crude oil market. The Germans are going to have to bite the bullet here, and they know it. I don't know what do they think. See, that's why they're in a hurry to get some sense of normalcy returned, because then they could think they'll be in a more powerful position. It's too late. And now the Italians have been so badly mistreated, coupled with, I'm pretty sure this is right. For COVID, the Italians got $2.5 billion out of that European deal that they agreed to, but Hungary got $5.5 billion. Go figure that out. And the Italians are pissed. You know what? They're pissed about a lot of things. And you know what? They've got more. This is not 2012, 2013, when Brussels could replace, whether you like him or not, Berlusconi. He was an interesting guy. And really basically parachute in Mario Monti. I love all these people who lecture to me about Europe, who really, their memories about the last BBC show they watched. But there are a lot of things that have gone on here. And there's a lot of ill will. And Christine Lagarde with Macron are trying to play upon that ill will and get this done. Because if Europe doesn't create a Eurobond, then it may as well end this whole charade, because the world has come to expect it, and the cost of failure is just now so great. But end it. If you're going to rip the Band-Aid off, rip the Band-Aid off. Because you're not going to squeeze them anymore. The world is not in the mood for squeezing, by the way. Take a look at all the articles being written about debt forgiveness in the emerging markets, some type of forbearance for pay for the next 2-3 years, and it's coming from big voices. Right now, the world is not in the mood to discuss austerity and squeezing. And for people to say, well, it's like they discussed, well, you can come to the European Stability Mechanism and you can do outright monetary transactions, OMT, which was a big part of Draghi's whatever it takes. But for the record, nobody ever took up OMT because it was based on conditions, and the conditions were far too severe. It was like going to the discount window until recently. Nobody wanted to go to the discount window, first of all, because it was an embarrassment, and they were afraid that it was going to be a signal that you were in trouble, and therefore you would create a run on its own by your actions. So a lot of stuff going on, and this is no time to be playing this game. So I want to see what Lagarde does. Because what she can do is she can enhance QE. And if I was her, I would tell them forthright, I'm going to grow it by another 2 trillion. Because they were already suspended, which was the capital key. You know, that was all part of the recent moves. So they don't have to buy it based on a prescription. And so if they say no to a Euro bond, because the Germans will go to court and try to block it, especially the German High Court, she can build that balance sheet, which becomes a synthetic Euro bond eventually anyway. So you can pretend. And if I was her, I'd tell them, I'm going to enhance it by 2 trillion. The Italians have debt to sell. The Spanish have debt to sell. I'm going to, and that's the way we're going to play this game. So you want to play, all you're doing is delaying. So you may as well get out in front of it. And as I say repeatedly, because I can't stand when people tell me what a great Chancellor Merkel is, this is Merkel's responsibility because she ran interference for Draghi in order to do this, to make this all possible. And this is where we lay. But this is one of the, and I'm only speaking to Peter's point here, because this is one of those factors that could really undermine anything the Fed has done and really push the world into a much more calamitous and speedy path to a real debt-inspired deflation where you had massive liquidation of assets. That would really, that's what everybody fears. Europe could light that fire very easily. They better wake up here. And here's my bet. If they would come to some type of real decision, the euro would get stronger, relieving some of the upward pressure on the dollar. So right now, to me, Europe is the linchpin of moving whatever the Fed and the other central banks have done along. Europe needs to get its crap together. It just needs it. The world needs for them to do it.
You know, I just threw up a Bund 10-year chart going back to a semi-annual.
Yeah.
You can just really visually see when Lagarde started coming in and what that spread's done.
Well, but that's a lot of the Fed too. Don't forget, you know, this has been, but Lagarde's just following whatever the Fed's doing anyway. So look for her to come with something very big because, you know, the Fed, every day they come up with something new. I mean, 2 weeks ago when they pulled that buying the high yield ETFs.
Oh, jeez.
Honestly, I couldn't believe it at first. I said, what? But every day, because if they cut, and then they make a big deal about cutting back, not them, but the media, repos being cut back. Yeah, they don't need it. They've got so many other ways of putting money into the system, and with all the T-bills, there's just so much stuff going on, and every day is a new day. They're going to show you a new twist somewhere, no pun intended. So,
and they're all coming off again.
Okay, next question, eh?
All right, what were the other questions? Let's see here. I think you answered some of them. We were talking about the gold price Tuesday, which I thought was just, you know, people raising cash again as the market was going down.
You know what? I'm not even sure that was it, Judd. I think a lot of it had to do that people misread the oil situation, and you had the deflationists out there. And then if you're a deflationist, you go, oh, oil's collapsing. So, you know, they're so convinced that gold is an inflation hedge, and they will not let go of that narrative. And you know, I've banged the drum, and it drives me crazy because, well, you know, every time I have to look at this CNBC crowd, which I don't even watch, so it's a rarity. Only if I know that somebody's coming on that I really want to see. But gold, where's the inflation? You know, for all those years where they were bashing Santelli, you know, about, well, where's the inflation, Rick? Where's the inflation, Rick? But nobody can answer why gold really kept its bid for the most part. Well, there's no inflation because, to me, that's its bid as the anti-central bank, the fear of the central bank losing credibility, and we can certainly attest. And I don't care that the equity markets are up. That does not give me central bank credibility. That gives me central bank liquidity. But with all the back and forth and, you know, pivots, not pivots, you know, from Bernanke's taper tantrum that he cowered in the face of the equity markets and bond markets reacting, and he wouldn't hold the course. They have no conviction. They have no exit strategy. And they've showed us that they will willingly depreciate the value of the money you have in the bank in an effort to bail out borrowers. So with that, gold holds its bid. Yeah, it has. Yesterday's a crazy, you know, but again, let's go back to my premise, which is wish orders. And yesterday I ran through my wish orders. But you know what? I kept looking at things, and that 1660 area in June was an interesting area. So there were areas to play in, and here we are today. It is where's the inflation? Well, it's on the inflation to come. No, I don't think so, because we've gone really, by their statistical data, we've gone 8 years, 9 years without any real inflation. In fact, that's what's kept all the central banks in a very easy mode, because they have this beloved holy grail target of 2% inflation that they haven't been able to hit. Well, I'm not going to discuss the conspiratorial ends of that. Well, that's wrong. There is inflation. I can only use the numbers that the market relies upon. Yeah, I can go create my own numbers and go, oh, yes, but if the market's not looking at them, you know, I could stand out there and yell, wolf, wolf, wolf. But if nobody else sees the wolf and everybody's reacting to it's only good sheep out there, it's a hard position to ascertain. Then I may as well be selling volatility and try to do that as a living. So we have all these elements, and I don't think it was yesterday. I think the gold was reacting to the oil. People said, wow, this is really, and can this happen? And they mistook what really, it wasn't a supply situation. We knew what the supply in the oil market was. It was a bid for storage, one of the rarities of all time. And it can happen in any commodity market. I mean, you can have 3-4 years of robust grain markets with little demand in which prices get decked dramatically because there's no storage left. I mean, we haven't seen it, and it's going to be doubtful, but it is possible. I don't think we'll ever run out of storage space for gold, so that won't be an issue. Gold will. And somebody says, "Well,
Ira, let's not forget that gold is no one's liability and therefore pays zero interest."
I understand, but a bund is somebody's liability, and that pays negative interest.
That's a good point. but it's an unnatural phenomenon, I think.
Which one, the oil?
No, the bund.
Well, it is, except that it's been here for 3 years. 2 years.
You know, question is, will it be there for 5,000 years?
Oh, I highly doubtful, but I'll be doubtful if it's there for 5 years. But it's been there for 3 years. So that which was a phenomenon is now become kind of commonplace to the chagrin of every theoretician ever. You know, so people say, oh, oil went negative. I said, so did interest rates. And they were not to be able to go negative either. I'm talking about nominal. Real terms, yes. That's what this world is all about, is real negative yields. So you have to differentiate. But that must have been Angelo, right? Who was it?
It was.
Yes.
Sure, I just threw up that SPY GDX chart on a semi-annual, just so people can get a real view of the return in the gold. Has been much bigger than the return in the stocks.
Oh yeah, yeah. Don't tell Warren Buffett though.
Ira, isn't it true that historically gold does better in deflationary times?
You know what? People don't believe that, but I think that that's absolutely true, because people get very nervous about what. It's a hedge against government fees reasons, okay? Central bank losing credibility. You know, we haven't always had central banks like that. And gold was the standard bearer of the system for good and bad, you know, because I can find plenty of bad things that took place with it, which is why some intelligent people look to remove it, but as the centerpiece. But everything that they put in place, you know, fiat currencies are great as long as governments remain responsible. U.S. government's responsibility ended in 1965 with Johnson's Guns and Butter program. End of story. And Nixon took it to a new level when he famously, you know, said, I'm paraphrasing, we're all Keynesians now, meaning that, see, once governments realize that they can spend without anything anchoring responsibility, it's tough. And that's what the United States, you know, that's Pax Americana. You were able to finance wars. And what did Johnson, by a very conscious decision, because he didn't want to bear the political responsibility of having to raise taxes to finance the Vietnam War. So he let it all go. And that's when you know, there's a whole history to this. You know, these things, if you only get your news, from what is considered the standard bearer, it's just not there because they don't look deep enough. And if you are a model builder and you have 7 years of knowledge, 7 years of data, because anything out there may corrupt your models, you know, they have a time series that they're comfortable with. I have an unlimited time series because I want to know everything that takes place that affected these things, as Angelo, you know, brings to the point. And they have a vast history, and you can't get away from them, you know? So August 15th, when the French, Nixon's buddy, you know, under de Gaulle and all, you know, Giscard d'Estaing, when they wanted to cash their dollars in and get gold, well, when they realized, no, there were too many dollars because they were trying to finance wars and other things and not bear the responsibility through higher taxation, well, became a problem. The world said, nah, we got too many of these things. Now they don't have enough, but that's all in the role of a trade dollar or a financial dollar. And as the article in the South China Morning Post last Friday, you know, they got into, because it's a needed discussion. You know, do you want to be the world's reserve currency? It has served the United States well, you know, and was built upon Bretton Woods for a reason. But that requires responsible leadership. And I'm hard pressed to tell you that I think that American leadership has been responsible. But I thought that long before I started becoming a trader, when I was just a graduate student studying multinational corporations and the role of the dollar in the world. I mean, this has been going on for quite a while. And actually, the growth in the emerging markets has served the dollar well because nothing came to replace it. You know, the euro was supposed to replace it, but we know how Europe acts. But there are, you know, and the Chinese are uncertain whether they even want to replace it because you know, as some people, the French maintained that because they saw that the dollar financed the U.S. empire, as they called it, and they were able to get away scot-free and print all the dollars they want and push it out there on the world. Michael Pettis, an economist that I like, who teaches in China now, calls it an exorbitant burden. So it's either an exorbitant privilege or an exorbitant burden or somewhere in between or both. Right now, I agree, you know, that especially during a financial crisis of this nature, this is an exorbitant burden. This is an exorbitant burden. And it's weighing on the Fed. And why the hell Trump, you know, as I said, and it's not a political statement, he went from the bully pulpit to blabbermouth. What are you talking about? You know, but I can only come down to one reason, and that's because he invokes the Navarro doctrine, which is when it's like Navarro thinks that anything's negative for China is positive for the United States. I mean, I think that's what his operative mindset is. I've distilled it to that.
Well, everybody in the world got on China's case last night.
Yeah.
Everybody.
Yeah.
The Germans to.
Yeah, everybody's on them. You know what they've done? Listen, when you're trying to square the circle of a totalitarian political system with a pseudo-capitalistic economic system, it's not an easy circle to square. It's tough. It's tough. And you're going to do foolish things. And right now, Xi, and believe me, I think that there's rumblings in China not from the populace, because at this point they're not a democratic force yet, but from within the political circle, that there's a lot of heat that's coming unnecessarily, and that he may have overstretched here. But we'll see. We'll see. What other questions were we?
I don't know. I think we hit most of them. Anybody else have anything that I missed? Speak up.
Ira, can we double back to just to Europe for a moment?
Sure.
Sure. What's interesting, I'm just curious what you think. What's interesting is that, we've got two, I mentioned it this morning, we've got two German women, Ursula von der Leyen, a German female, head of the EU, and we've got Angela Merkel.
Yeah.
That appear on the surface to be trying to hold the euro together. Either that's just a facade, or there's other more powerful forces operating behind the scenes saying no to a Eurobond. I was just curious what you thought about that.
Who is that, Angela?
Yeah.
That's a very prescient statement, and I think you're really onto something. Okay, that's right. On the face of it, because Merkel's in up to her eyeballs with this. She steps back and she's calm, and she's not Trump. It's the same thing as Obama Nobel Peace Prize. He wasn't George Bush. And the world. So, but Merkel has done, to me, a lot of damage, and they know that they're stuck here. But the political forces in Germany, what Bernard Connolly used to call the German triumvirate, okay? Manufacturers, bankers, and old-line German imperialists that still exist if you dig deep enough. And I can't tell you if that's factual, so you can Bernard's opinion, but his is a pretty informed opinion. And this old line may be the group that's so totally opposed. They've liked everything about the European Union when it benefited Germany. Like back in the early aughts, when Germany was the sick man of Europe, so to speak, until they got their house in order with Hartz IV and got their labor reforms in place, and they got unification paid for with very low interest rates, which, any solid economist will tell you, set the borrowing of Spain, what were known as the pigs that got into trouble, Portugal, Italy, Ireland, Greece, Spain, and others, because interest rates were kept so artificially low to placate Germany, set in motion all that borrowing and all that ridiculous spending and overreach. Truth to that too, because the cost of German unification was very expensive, and Helmut Kohl's mistakes made it even more expensive. So it was expensive, and Europe helped to pay for it, and then Germany did get themselves in order. They really basically got wages frozen, became the most competitive engine within Europe because they run massive trade surpluses within Europe as well as the rest of the world in trade current account surpluses. So they've benefited, and as Trump up until Friday or Saturday was quick to tell you the Germans were currency manipulators because the euro was too weak, even though the Germans can't manipulate it by itself. but the Germans certainly availed themselves as an export power with a very weak currency relative to where they would have been had they been a standalone nation. Okay, can we agree on that?
Oh yeah.
Okay.
Sure.
So they've gotten the best of it. Now that the bill is due to be paid, as Charles Dumas would say in the bill from the China shop, which is a phenomenal little book. But the bill is coming due. And as Bernard Connolly again wrote 25 years ago in 1995 in The Rotten Heart of Europe, that was Europe going to be a transfer union? And there are some old line German power that don't want to transfer money to the rest of Europe in order for Europe to sustain itself and become one. So they like the idea of a euro, they like the idea of a common currency, they just don't want the idea of common responsibility because they think that the rest of Europe are, spendthrifts and they're frugal and practice good habits. And that's the sensible battle. So you say that underlines, and are those powers exist? Yeah. Because the banking establishment is on its ass because all I do is have to look at Deutsche Bank, which again was the crown jewel of the German financial system, which struggling on a good day. The trade group has done wonderfully with the weak euro, so they've enjoyed it. And, as I've always maintained, what was going to be the price that Germany was going to ask for in order for them to become a transfer union, quote, fiscal harmonization, quote, a guarantee of the whole entire financial system of all that debt that exists on the balance sheet of the ECB. What's going to be the price? That is the question. It's not a theoretical question. The question is getting close to being called. It's no more theoretical. Before you could, 5 years, 6, 7 years ago, you'd say it's theoretical. But what is the price? There's going to be a reckoning. There is no getting away from this. There is going to be a reckoning. And as I say, everybody, I get pushback, and I'm saying, bring whoever you want, bring whatever book you want to the table, bring whatever discussion you want. Let's have an honest discussion if you disagree with about it, and give me what you got. Because I just went through this in discussing Wolfgang Munchau's column in the Monday FT. Thank God there are no threads anymore. I just write a piece and then people will respond. I'll write a letter, a comment back because it's easy to do. And you get, and everybody, you're doom and gloom, you're this, you're that. I'm not. I'm a realist. Tell me what the alternative is. And the opening question, and this solidifies it, okay? Okay, Angelo, this is the easiest way to ask the question. If the world didn't think there was an implicit German guarantee to the whole EU project, then tell me how Italian 10-year yields could be at 2%. If there's not a guarantee.
Yeah. Like for example, when is a sale really a sale? When Germany has been financing the sale of their exports to all of their trading partners. Does Germany, in a sense, have to turn around and say, all right, you know what? We're gonna have to eat it and write off all of those quote unquote bad debts and start from scratch, which is basically what you've been talking about. Germany benefiting from a cheaper currency, so on and so forth. So has all of the sales that Germany has made in the form of exports over the last 20 years since the euro came to fruition, were those sales real or not? And will they, the day of reckoning, will the day come where they're going to have to write off all of those quote unquote accounts receivables as bad debts in some way, shape, or form, right?
Yeah.
Whether it be financing a euro bond or saying, okay, the way we're going to finance it is we're just going to have to back off from the euro and let the chips fall where they may. I don't know. I have no idea. But I'm looking forward to finding out in the days, months, years to come who the real power players are in Europe.
Well, and again, my opening question to Lagarde, Anthony, could the Italian 10-year yield, let's say the 2-year yield at 1.1, okay, which is, and it's only over 2 now because if we go back a month and a half, the Italian was what, down to 130, 120?
Yeah, it's basically up 50 basis points in the last few days.
Yeah, could it have been that low? Could it have been that low without the market having an implicit German guarantee for the entire European project? If you're not
a chance, not a chance.
Okay, and if you're not prepared to answer that question, you want to dance around it, then we're not going to have an honest discussion. We're not having an honest discussion.
Ira, here's a comment from Lars, okay, from Germany.
Yeah.
If a Eurobond or something like that would be created, and that would strengthen the euro a little, what good would that do Italy or Spain? Interest might go down, but euro would be even stronger. That would not make Italy or Spain more competitive. Is all that not only kicking the ball down the road a bit?
Well, you know what, Lars, what we've seen the euro at 140, 150, 160, and the German locomotive was powering on. So the value of the euro, if the euro is, but I would say back to Lars, the purpose of the euro under French eyes was to set up an alternative for global investment to the dollar. But therefore, it has to have a sense of long-term credibility and more than just a trade benefit or, machination. So I don't think I think that's a straw man question because we've known it. Listen, Judd, if I go ahead, run the 40, run a 200-month moving average, or you can't.
I get the semi-annual up in the euro right now.
Yeah, what's the average?
On the semi-annual, I mean we're under everything.
Okay, but
it's also today the stops were 108.79, and we've run them before, and we're under them again. That's the semi-annual ORL number.
But if I ask you, what's the 40-month moving? What's the 200-month moving average on the euro?
126.40.
Okay, Lars, get me back to 126. And Judd, you know that's been a big level, 125 area for me. So we know that the German locomotive worked plenty well at 126.40. Right now, the currency's weak because people are afraid it's not going to make it. They can't determine whose euro it's going to be. Is it going to be the German euro or is it going to be the Italian euro? But for God's sake, make a decision already. The United States under Alexander Hamilton could never have become the United States without a unified bond. And he knew it. And that was Alexander Hamilton's genius. If you're going to be a union, you need to be a financial union. You can't just pick, you want to pick and choose. But look at the 40-month moving average. And let's we go 18, it used to be, I'm thinking of D-Mark, so I'm talking Pfennigs. But let's say we go 18 cents over, the euro goes to 144. You're not even close to the all-time high. And when the euro came into existence, I think it came in at 1.1790 January 1st, 1999. I'm pretty sure that's where it began at. So you're under, and yet we know that the strongest economy runs a massive current account surplus. and trade surplus, bigger than China's on a GDP basis.
I threw up the D mark for everybody.
Okay. So,
You know, Ira, though, as I'm thinking about what your answer to Lars, I mean,
yeah.
dynamically speaking, he may have a point, and here's why. During the period of time when the euro was its strongest, what was China's economic condition at that time?
When the euro was its strongest?
When the euro, you know, was 140, 125, during that period of time, China's economic condition was accelerating big time. That's not the dynamic. That's not the dynamic anymore. And wasn't China one of Germany's biggest customers?
It still is. So
it still is.
Yeah,
but you know, my point is that the economic dynamic back then, when China was accelerating big time economically, that's not the case anymore. So they need a cheaper euro.
Okay.
Or Germany now needs a cheaper euro because China's in a tough spot.
Okay, so let me ask you a question. So since when did you become Peter Navarro? No, that's my wife.
Who's Peter Navarro? No, I was just thinking about it. You know, I was just trying to think about the economic dynamic. What was the framework at the time? And at the time, especially coming out of the WTO, I mean, China's GDP was like accelerating like a rocket.
Yeah.
You know, so they had the cash. You know, that was the peak of globalization, if you will.
Okay, so let's extend it and then put up the euro yen, and then you're going to really, you know, help make your case too, because the yen was probably around 79, 80 to the dollar, 78. You know, because everybody could get away with it because the Chinese were carrying everybody on their back is basically what you're saying.
Yeah, kind of. Like if the euro went back to 125 or 140, I think Germany in today's world would have a much more difficult time.
Well, but still a lot of German trade is within the EU, by the way.
That's true.
So they gain
That's true.
Listen, and that's what Germans get very righteous about, and I don't disagree with them, because they did, you know, under Hartz IV, when Gerhard was chancellor, the Germans made some hard choices, and more importantly, German unions made hard choices. The same choices, by the way, that American unions made with NAFTA, because the creation of the EU served two purposes. It allowed the unification of Germany, which is really Helmut Kohl's historical point, because that's what Helmut Kohl wanted to do. So the unification of Germany, but with that became the EU was going to be like, you know, it was going to open up the East European labor market to German and French, well, French, who knows, but manufacturing and with cheaper labor. And German unions understood that. So they signed on to Hartz IV because they took a guarantee for, they would curb wage increases for job security. Lars, yes or no?
Well, he hasn't. What's he saying? He says, I just wonder what the youth unemployment and the financial mess will mean for Italy and Spain in the coming years. Germany now has much more competition due to China getting stronger, and our car industry and machine tooling is feeling the competition.
Yeah, but the U.S. too. So shouldn't the U.S. also have an appreciating currency?
Oh yeah.
Huh. Yes.
Right.
Then you get into the Trump and Navarro arguments and Wilbur Ross. Hey, well then we all need that because the U.S. has an auto industry. Oh wait, it's been hollowed out by movement, you know, to other places. But you get the emphasis behind NAFTA. And believe me, the EU is the European answer to NAFTA, and the currency was supposed to be, by French designs, an alternative to the dollar. I mean, there's, again, context to this. There is context. You got to work at it, but not everybody can have their currencies going down at the same time. And the world would be better off right now with a much weaker dollar than they are with a weaker euro. It may not be for Germany, but again, so much of the trade is within Europe. You know, don't forget, now that the UK is leaving, and now Brexit becomes a much more interesting discussion and a more honest discussion. But Germany runs a huge trade surplus with the UK, huge. So, you know, Germany needs a healthy Europe. Now, does that require a weak euro? I don't know what a weak euro is, because I've seen a range in the euro, I think from 160 down to 82, and now we reside at 108 or so, you know, generally speaking. So this is a very complicated question, but I don't think that everybody can have a weak currency at the same time. And where it may benefit some, and again, get your houses in order. When you really needed a weak currency, which was when Germany was going through reunification, and they got a weak currency. That's when the euro went to 82. What year did the euro trade at 82 and a half?
It was at 2000.
2000.
And then they retested in 2001 in July.
Right. Right in the mix of Germany.
The collapse of NASDAQ.
And they're trying, oh yeah, in the Neuer market, but Germany was trying to figure out the enormous burden of paying for East Germany, because it was an enormous burden, far bigger than they initially thought, and it was done with very low interest rates. I mean, go put up the Euribor. Tell me where your Euribor rates were.
Yeah, what's the symbol for that? I don't even know if I can get it.
Here, I'll get it. Hold on. It's QE. I'll tell you exactly where it was. Okay. I know this is going to be hard to believe. By June of 2003, European interest rates were at 1.2%, okay? And they were dropping fairly dramatically from, let's see.
What's the symbol you're using?
I'm using QEA, and then I'm using I'm doing a monthly chart, so I'm using, it's June, so it's QEA, and the continuation chart picks it up.
It's just QEA?
Yeah.
Okay, there it is. All right, and you're looking at, I got the semi-annual active daily continuation up.
Yeah, and you can do a euro overlay and really see it pretty well. But, again, I know, and I'm not trying to simplify it. I'm trying to find ways to make money with it. But the euro is a very important element here in the international situation, especially if we're going to prevent a deflationary spiral. Because there's a shitload of debt out there. There's a lot of questions. And the longer you put it off, this is not good time that you're buying, because it just gets deeper and deeper in debt as the song goes. And it has to contend with. Lars, it's a good point, but it's the same point that Donald Trump makes.
Lars says, thank you. About Brexit, why does that not weaken the euro? The EU area becomes smaller after all, or is the current price already pricing this in? That's a good question. I don't know. I think that's why the euro is as weak as it is, by the way, because some of it is the Brexit. Although if you listen to the remainers, Europe is, the panacea for everything, and Britain being out may be a good thing.
So I don't know. There are so many unknowns here. That's why anybody who gets, too convinced that they know everything or that they're sure of the outcomes, certainly not. And the oil on Monday should remind everybody that every time you think you've seen something, they will show you something new, especially in these markets.
Oh yeah, Rob called me up. He said, they're writing you a check for 40 grand right now to buy oil.
Yeah, I know. You sent me I really was not paying attention because I wasn't involved in it. And all of a sudden, my phone started ringing. Everything started smoking. My screen started smoking. People were going nuts. And I got a call. This name, Judd, and I think you've met him. I got a call from Carl Weinberg.
Oh, come on.
I swear.
Wow.
I went to the supermarket because I had to get dinner. I reload, and my phone rings. I go, who the hell is this? And it's Carl, and who I have a lot of respect for. Carl's a really good economist. And him and his team, we did a Zoom 45 minutes later. He said, when are you going to be home? I said, 45 minutes. He says, okay, we need to pick your brain on this. And so everybody was running around trying to understand this.
I even got a text from Eli Tullis. I haven't heard from him in 10 years.
Well, he wanted to know if you could absorb all that with cotton balls.
Yeah, there you go. Oh, boy.
Eli. No, but this is a very good conversation because let's watch Europe to see what they come out with the collateral deal today. This is very important, by the way.
Okay.
And you've already seen, so do they know that they have a deal done to accept junk, that the ECB will be able to buy junk? So if Italy gets downgraded on Friday, because we know the Italian German spread corrected pretty big today, right? Let's see.
Yeah.
I don't have an updated one, but let's take a look. It's into 252. It's out over 260. Yeah, so it's proved. And is that on the basis that they know, because everybody in Europe who needs to know knows, or is it just the ECB in buying? That's because that's the unknown. When you get a rally, is that because the ECB is on the bid and they're just keep bidding it up to push yields lower? We just don't know, but it does make an interesting trade. Keep your eyes on it. All right, that should do it for me. I think I gave you guys.
Thanks, Sarah. That was great.
Good, really good questions. How many people did we have today?
We had like 40 in.
Good. Okay, good questions. You know what? Keep them coming. We'll go from there.
Thanks, Ira.
Okay, my pleasure. Be well, guys. Stay well.
Yeah.
All right.